Welcome to Trader TV. I'm Dan Barnes. Joining me today is Carl James, Global Head of Fixed Income Trading at Pictet Asset Management. We're going to be talking about the trading conditions in the corporate bond market after summer. Carl, welcome back to the show.
Thank you. Lovely to be back.
So tell us, how would you characterise the liquidity profile in the credit markets that you trade since the end of summer?
Essentially, I'd say it was pretty stable. If you had Euro and US IG, there's been a bit of cash building up over the summer, been a lot of primary activity. The secondary flow is quite active. EM, I guess bids was probably easier to come by than offers, essentially. We're kind of right on the headlines, actually, at the moment. So we've kind of come out of that first area of things have settled down, a lot of issuance, and I think we're now hitting that sort of fourth quarter, everyone having a little think and just looking towards the end of the year.
What's your perspective on the illiquidity problems that some people report in the credit markets?
It's an interesting question because there is an element to me where I think, what are they expecting? If you think historically, bonds were a buy and hold strategy, and I'm not quite sure that there's a perfect balance between supply and demand, and different people are investing in bonds for very, very different reasons.
Yeah,
I'm not quite sure I buy the phrase, illiquid. It's more just a case of, there's more demand, and that's driven by chasing yield, looking to match up assets versus liabilities. There's a number of layers to it. So I think at the heart of your question, though, people were used to a certain level of engagement by the market. And as you went through the pandemic, some of that engagement reduced. It's about really how you sort of look to engage with the market itself. Who is it that are your, if you like, service providers? Are you essentially just doing RFQs, or are you using different methodologies? Me and my boss, we've made a real effort to engage with our top counterparts, really sort of do some detailed work regarding around broker review, where they've done very well, places where they're not doing very well. And that might be they say, yeah, commercially we don't want to be involved in that space, but it's been a collaborative effort to try and say, well, look, we want you to do well, because obviously if you do well, we do well. There's an element of a symbiotic relationship.
Yeah.
Nurturing those relationships has actually paid dividends. Through the pandemic, there were particularly two houses, in my experience, that really stood up very well and captured far more business from us. The other thing I'd talk about is different methodologies of trading.
Yeah.
Essentially you've got the RFQ model or the bilateral, voice trading, but there are other methodologies. There's dark pools, synthetic central limit order books. There is different ways that you can engage in alternative liquidity or finding alternative liquidity.
So you see short-term and long-term strategies for overcoming any of those barriers to accessing liquidity?
Yeah, the short-term game really is understanding what it is you're trying to do as an asset manager.
Yeah.
Will you have high velocity in your portfolios, or actually is there some pragmatism in what you're looking to shift off the portfolio and bring in the portfolio? So there's a lot of portfolio optimization that we're looking at. A portfolio manager might look at a particular bond. Well, if another bond has similar characteristics and is available, then there's a conversation to be had rather than chasing a specific bond.
It's quite interesting. I have the sense that some people think about the application of technology to trading very much about the execution process. But I have the sense that you're really applying it in that feedback process in terms of getting information from the market to support decision making. And that's giving you both that short-term and long-term ability.
The long-term element really is a much more quant-driven process predicated on some really good technology. We've built a database. We have direct feeds from the brokers giving their axes. We also have 700 days worth of trading, of our trading. So any trade that comes into our OMS what will happen is that database, which can carry 5 billion messages a day, what will happen is that anything relevant for that particular order will attach itself to that order instantaneously. So the dealer instantly is able to look and go, who have we traded with, in what size, how have we traded with them? And if we've done an RFQ, who came second, who came third, how far away were they? Are there any axes that were around today? We hold those axes for 3 months. After 3 months, it goes up to the cloud. So we've got a huge amount of data. And again, that feedback loop goes back into the brokers. We can overlay the business we've done with them and overlay the axes they're sending to us.
Can you define the impact that your approach has for investors in Pictet?
We know that we have a set of portfolio managers that can deliver alpha.
Mm-hmm.
But I think that's too simplistic to really put it in those terms.
Sure.
It's not just the PMs. There's a whole holistic view that we need to be thinking about. There's a lot of work that we do between the portfolio managers and the traders, and we're very, very close, those two teams together. It's really about understanding what their portfolio is, what their strategies are, what they're looking to do on those portfolios for the future, what are the names that are looking for. In all honesty, I don't really think this is rocket science. I think there's a lot of asset management firms that are doing this, but it's really sort of predicated on the ability to get to that data quickly. In terms of the added value to the end client, it's a bit difficult to break it down into sort of those individual building blocks. I'm sure in time we'll be able to do that. We've actually got an internal project to identify specific elements of trading alpha that we bring. It's just a project that we kind of thought would be interesting, so we thought we'd throw that into the mix.
Very good. Carl, that's been excellent. Thank you.
My pleasure. Thank you very much.
I'd like to thank Carl for his insights today, and of course you for watching. To catch up on our other shows or to subscribe to our newsletter, go to tradietv.net or etftv.net.